Well, record run on Wall Street continues on the back of easing in inflation levels in the month of June. In fact, consumer prices for the month of June rose 3% year on year, which is the lowest level in more than 3 years, most importantly. Meanwhile, core inflation, that is a CPI, core CPI, which includes volatile food and energy costs, that rose 3.3% year on year versus an estimate of 3.4% increase. Meanwhile, US weekly jobless claims fell 17,000 to 222,000. And to discuss this further and what does it really mean for Fed's policy rate trajectory, we're now joined by Santosh Rao, Head of Research and Partner, Manhattan Venture Partners, and Ajay Bagga, Market Expert. Thank you very much, gentlemen, for joining us this evening. I'll come to you first, Mr. Rao. How are you seeing the core and headline numbers here? And is Fed now a step closer to cutting rates? And how many this year is the most important question?
Thanks for having me. I think this is good news. The data is definitely on the right side. Inflation needs to come down. It has. I think the more important data was the two-month average for core is 2.2, which is very good. That's what the number. That's the number to keep an eye on. But of course, the overall year-over-year number is like you mentioned, 3 and change. So it needs to come down. Overall, 2% is the target, but that's going to happen over time. I think Fed chair yesterday made it very clear that he doesn't need to see 2% before he does anything with the interest rate. So that's, but as long as we are trending in that direction, he's fine with that. So as to when that will happen, this is definitely a good one. So 2 months, good data, but we had a few months before that of bad data, like inflationary data. So generally, I think he will wait. I think July is too early. This number kind of makes a case for September. I think there's one more data ahead of that, ahead of September meeting. So I think he will actually, but I am in the camp that there'll be one rate at the end of the year, one cut at the end of the year. I think that's why I'm going to stick with that because it's too early, definitely in the right direction, but I don't think he's going to jump on this too fast. He's been cautious, very data driven. I think he'll take that into account, but not jump on it too aggressively.
All right. So you're saying that the Fed is not going to jump on it. They will still maintain their cautious optimism, their cautious trajectory as far as the rate cut trajectory is concerned. Let me take that point across to Mr. Ajay Bagga. Mr. Ajay Bagga, do you agree with Mr. Rao? And will there be a rate cut as soon as September, as the markets have been expecting for a very long time?
Yeah, Sumita, if you look at the market got it wrong right from last September onwards. And in fact, even in January, most of the big wirehouses were forecasting anything from 4 to 6 rate cuts in the year. And we didn't see that happening. Right now, if you look at the Fed funds futures, there's more than an 80%. Actually, it's nearer to 89% chance of a rate cut in September and a second rate cut in December. In fact, 3 rate cuts are also being projected with the probability of about 40 to 45%. So it is a reaction by the market. As Mr. Rao said, there will be one more data set for the Fed before they meet, and probably they will have the August data as well. So it might be 2 data sets before the 18th September meeting. So let's wait and watch. They have been quite clear in saying that it's meeting to meeting, data driven. The big difference yesterday, on the back of which the markets rallied again and the S&P 500 made a 7th successive all-time high. The big difference yesterday in the Senate testimony, he said something to the point of that we will not wait for 2% to cut. So the shift was from waiting for a level to waiting for a trend. And then we have got the trend today. If you see the 3-month annualized number, it's coming to 2.1% today. Again, early days, we were disappointed in the Jan to March data. That's looking like an anomaly today based on the last 2 months data. It's giving more leeway to the markets. But what will happen? One, there will be a sectoral rotation away. from the Magnificent Seven, from the growth stocks today, we are seeing the mid caps, small caps up nearly 3%. The Russell 2000 index
Right,
is
Mr.
up
Bagga.
3%.
Mr. Bagga, we'll come to that point, but let's take for some time on US CPI print that has come in, and let me bring in Mr. Rao. Mr. Rao, Mr. Powell stated that progress on the 2% target was really modest. How confident are you that this inflation print, as the numbers show, is moving towards that 2% trajectory, and how soon do you think that could be reached, given that there is a national election coming up in 3-4 months from now?
Yeah, there are 2 or 3 reasons why I don't think the cut is going to happen very fast or too many of them, because it might become very political. It might take on a political angle. They're doing it just for political gain. So I think that's one limiting factor there. But he's data driven. He said he's independent. He's going to act based on the data. Now, just in terms of inflation, yes, the core is coming down, but the inflation, I live through that here. It's still there. Goods inflation is still there. Food inflation is still very high. People are not feeling it, even though in the last data, the wages did go up. So the real wages did go up. So that's a good sign. But their layoffs are there. Unemployment rate went up. So things are definitely slowing down. At this point, if it gets very bad, he might do a September cut. But at this point, if it continues the way it is, and we'll see the earnings coming out, banks report this week, and if the outlook is good, I mean, it's supposed to slow down, but if it's fairly decent, I think he will stay the course and just do one cut in December. I think that's my take. At this point, things are good, steady as she goes. 2 months don't make a trend. Let's wait some more time. Maybe one more data. I don't know what his calculus is, but maybe one more of soft data, benign data. I think it might push him to do something in September. But other than that, he might say continue. There are elections coming. Let's get past that and let's make a cut in December, because that'll be more palatable for politically and economically.
Okay. You raise very valid points, Mr. Rao. Let me stick with you, and then I'll go to Mr. Bagga for the impact on US markets. But let me also ask you about oil. Now, the ECB is very concerned about oil, and we've seen a rise in oil prices as well. 2 wars brewing in the world. Is the Fed worried about the inflationary impact of oil in the coming few months? And, is the price increase that we've seen in the past few months enough to make Fed cautious?
Look at this month's today's data actually. Energy prices were down month over month and year over year as also, I think. So, but overall it was down. But that can pop up anytime. So that adds to the pressure. So it's definitely, it keeps an eye on that. Energy is an important piece of this whole thing. But that's on the headline side. So, but overall, I think he's going to look at everything. Like I said, his biggest concern is no disruption from this wars going on, no supply side disruption. We don't want that, and we're not all clear on that one. There's always this Middle East thing is always bubbling up, so we don't want any thing to put pressure on the supply chain. And then, of course, the China and the Russia thing, and that's just an ongoing conflict that seems to be escalating as opposed to coming down. So that's a lingering dark cloud, and he's going to keep an eye on that. So he doesn't want to get ahead of that. He will wait there. And so there are a lot of issues circling on the horizon. He's going to keep an eye. But meanwhile, this soft data is good news. Let's hope it continues in the next reading as well, and then we'll take it from there. But the job market is definitely slowing down slightly, and the economy is definitely slowing down, which in a way he wants to do. He doesn't want that to get too ahead of itself. So that'll be disinflationary if all these things happen. But he wants his operative word is sustainability. That's what he's looking for. And if he can see signs that this is sustainable, this downtrend,
Right.
I think he will go ahead and act on
Right.
it fast.
Right. Right. Mr. Bagga, let me come to you, and thanks for very patiently waiting it out. I want to understand from the point of view of Indian markets, I mean, this inflation print and, of course, how the Indian market largely has been doing since the past few months. Is there more space for more risk appetite to be sparked in the markets? What do you really project and predict for the Indian markets?
Yeah, I think on the monetary side, it will open some space for RBI to cut. Once the Fed starts cutting, they will follow because you will not risk the rupee. The good news is with the JPM bond index inclusion, we have got about 85,000 crores, expecting about 2 lakh crores over the next few months. So the RBI has a good cushion to protect the rupee. Based on the bond inclusion. But you can expect a rate cut by December by the RBI, provided the Fed cuts in September, or we go to February. Second is with the budget out of the way by end of this month, you will know the fiscal policy and the fiscal space. So RBI's hands will be strong. As far as the Indian markets go, some sectors are looking quite overvalued, like railways, defense. We are seeing some amount of profit taking happening there, but there will be a sector rotation coming by. Right now, banks are not doing too well. They've been again out of favor for the last couple of weeks. But I think as the budget gets sorted out, you will see a rotation back into banks, into utilities. Those should be the leaders of the next rally. And then IT comes back at some point. You know, the Indian IT is sitting in the middle of the enablers, right, the semiconductor ones.
Okay. Right. Thank you very much, Mr. Rao and Mr. Bagga, for sharing your thoughts on what the numbers really mean for Fed's decision on whether there will be a rate cut by September or there will be not. But interesting perspectives from you as well, Mr. Bagga, on a realignment of sorts as far as sectors are concerned vis-a-vis the India market. Thank you very much once again, gentlemen, for joining us this evening on ET Now.
If you like this video, then like, share and subscribe to ET Now.